This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So welcome to the section of the syllabus all about published company accounts. So we have this chapter which goes through and looks at the essentials of what is a statement of financial position, a statement of profit or loss and other comprehensive income, and a statement of changes in equity. What we then go through and do once we've covered the basics of this, the next chapter we'll go through there and have a look at what we have with regards to your statement of cash flow. So a little bit of revision from the world of financial accounting. Okay, so there is a standard that governs the presentation of financial statements, and that standard is IAS 1. Sort of makes sense, doesn't it, that the very first international accounting standard that was ever created helped us there to go through and give us guidance on what the financial statement should look like. Okay, because we have one set of financial statements that covers everything that the users of accounts need. So remember that we have different users of the accounts, whether that's the shareholders, the employees, the lenders, the governments, environmental agencies. They all need different things from a set of accounts, don't they? In terms of looking at the performance, the position, maybe specifics to do with the performance or the position. So when you're looking at a lender or a creditor will be interested within the ability of the entity to pay back the debt. So it'll be very much looking at the gearing, the interest cover, and whether or not that those payments can be made out of the cash flow that the business generates. Okay, so that would be their focus, but we can't just prepare a set of financial statements that looks at the lender's perspective, does it, and meet their user needs. So what IAS 1 does is addresses all the needs of the users to ensure that we have a clear and understandable set of financial statements. Okay, so that we have a consistent approach as to how all that information is presented to the users. Okay, so IAS 1 specifically says that a set of financial statements has to go through there and have, is it there, a statement of financial position? So is that your SFP? That's abbreviation that we'll use throughout the course. So that's showing you a snapshot in time, a picture of the assets that you control, the liabilities over which you have an obligation to make those payments, and then you also have, is it the equity? Okay, so the assets, the liabilities, and equity are in that statement of financial position. How do we present it? IAS 1 tells us what to present. We then have, is it the statement of profit or loss and other comprehensive income? So usually referred to there, is it as the SPLOCI, or SPL for statement of profit or loss, SPLOCI if it's there for your statement of profit or loss and other comprehensive income. So remember, profit or loss is all your realized gains and losses in the year, and other comprehensive income is effectively where we show the unrealized gains and losses during the year. So gains that we can anticipate that might be made in the future. So one that you've seen already in financial accounting is looking at the revaluation of property, plant and equipment. That revaluation gain hasn't been realized because it only gets realized when the property is sold. Well, if it hasn't been sold, it therefore cannot go into profit or loss. Okay, it will go into profit or loss when we gain a profit or loss on disposal, but it's not being disposed of, has it? It's just an unrealized, stored up gain for the future, isn't it? So that will go into other comprehensive income. Okay, we've then got a statement of changes in equity. So very literal, isn't it? It is a statement that looks at the changes in equity. Couldn't be any more clear, could it? So it takes the equity section from the statement of financial position and looks at the reasons why the opening balance has changed to the closing balance. So looking at the movement in share capital, looking at the movements in retained earnings, looking at the movement in other comprehensive income and why they may have changed. Okay, maybe to do with the issue of shares, profit made in the year, dividends that have been paid to the shareholders. All that information is contained within the statement of changes in equity. Okay, statements of cash flows. So statement of cash flows is unique in that the detail of what goes into a statement of cash flows actually has its own separate accounting standard. So is it the IAS 7? Okay. Remember, don't worry about the numbers for each of the accounting standards. I just throw them in just in case you're interested, which I'm sure you are, but you don't need to remember them for the exam. Okay. So your statements of cash flows, everything else, the position statement, the performance statement, your statement of change in equity, they are all based on the accruals concept, aren't they, that we've seen in the framework, the matching concept. Cash flows is factual, isn't it? Okay. When we're accounting for things based on accruals, it's all very judgmental, isn't it? In terms of the measurement, in terms of whether or not we should or shouldn't recognize it, whether there is or isn't an obligation, do or do we not have control of an asset. So there's a lot of subjectivity and judgment, isn't there? Okay. Whereby cash flow is factual. We know the cash coming in, we know the cash going out. We can tie it back into what's happened there with regards to the bank statements. So therefore it has its separate accounting standard. Okay. It just looks at the inflows and the outflows from our operating, investing and financing activity, doesn't it? Does that ring some bells? Yes, no? We'll see it in the next chapter, so fear not. Then what you've got as well is looking there at the notes to the accounts. So that will go through there and tell us all about the accounting policies. So how do we measure our inventory? Yes, it's the lower of cost in NRV, but do we adopt the LIFO or a FIFO methodology? Depreciation policy, is it straight line reducing balance? It's all contained within the notes. Okay, so we'll have some explanations of the accounting policies, and it will also have the detail behind the movement in PPE with a PPE note, intangibles, financial instruments, you name it. However, for this exam, we're not worried about the notes. What you also need as well to have a full set of financial statements is also looking at comparatives. Now, just one set of numbers for this year is useless without knowing what the numbers were for the prior year. Okay, that will then help us with the analysis, won't it, and the interpretation of looking at whether or not that balance is increased or decreased, and then we can investigate why it has moved. Okay. So if you can do that, we're going to go through there and get yourself a fair presentation of the results. And a fair presentation of the results is achieved by compliance with the IFRSs. Okay, so if you go through and follow all of the rules that govern your international accounting standards or your international financial reporting standards, then therefore you will have a fair presentation of the assets, the liabilities, the income, and the expense. Okay. When you're going through there and helping the users to understand what is happening with this business, you also need to go through there and disclose, is it the name of the entity, whether or not it's the individual or group financial statement. That's going to be important to help the user of the accounts know what assets and liabilities and income and expense it's looking at. Is it just for the parent company or is it for the entire group? Okay. We also need, is it there the reporting date? And is it there the period covered? You also need, is it the presentation currency? So we'll see more about that in the foreign currency section of the notes. But, what currency are the balances in? See a lot of numbers. Is it in dollars, pounds, euros? And then also as well, the level of rounding. Is it thousands? Is it millions? Is it billions? Okay, that's all relevant. Because what we can do, we just have a quick look in terms of an extract from, I think it's Nike's from a few years ago. Look, the information that's there. You can see there that it's got the name of the company, so Nike Inc. Okay, so a US business. This is the balance sheet, so statement of financial position to you or I. So it's the consolidated balance sheet. So that is effectively going and saying, well, this is for the Nike group. So looking at not just the parent, but all the subsidiaries that are being consolidated, because there will be several different businesses that the parent company will control. Okay. It's also got there, is it the date, the 31st of May? You can see there that we've got 2016 and 2015. So the reporting date is the 31st of May 2016. The previous one is the 31st of May 2015. So you can see that there's been a year. As well as just the reporting date, you've also got the comparatives as well. Okay, and then what you can see hidden away in the corner is that Nike don't just have cash and cash equivalents of $3,138. So the presentation currency is the dollar. Now this is $3,138 million. Okay, wow, is that $3 billion dollar cash? Okay, there we go. But you can see there that cash balance has fallen from what we had, was it there in the prior year. We look at the statement of cash flow to investigate why that has fallen and do a little bit of an analysis on it. Okay, there you go. So that's just an illustration in terms of what you see, backing up what it says in IAS 1. Okay, so that's what you have is the essentials of IAS 1. We're going to go through it in the next video and just have a little look at, the balance sheets. Did I just say balance sheets? Oh, Mike, blast you. The statement of financial position, that's what it's called, isn't it? Okay, who cares what it's called? The statement of financial position, and also the statement of profit or loss and other comprehensive income, just to see how they are formatted in a little bit of detail under IAS 1. I'll see you in the next video.